financial accounting, we're talking about financial performance. And this is the thread that really holds this whole course together. In the first chapter, we talked about the financial statements, the balance sheet, the income statement, the statement of cash flow, and the statement of retained earnings, or the statement of owner's equity. Now we're at the end. And now we've covered all the tools and the rules that you need to know in order to answer those key questions that we posed in the first chapter, which is, how's it going? If I am a business, how well am I doing? And we know that the income statement answers that. It's the revenues, what did you sell, versus the expenses, the costs, or the other items that you had to incur in order to generate those revenues. So it's telling me how profitable is the company. This chapter we're going to be looking at profitability ratios, and that those profitability ratios will allow us to hone in on the essential ingredients to how's it going as far as the income statement is concerned. Not only will we look at how's it going as far as profitability and what our bottom line is, revenue minus expenses, but we'll also look at the implications of the income statement as how well it does in generating cash flow. How does it throw off cash? And to do those, we'll be looking at some cash flow ratios and looking at cash flow generation from the income statement. So the income statement, how's it going? How much cash did it bring in? How much cash did you have to spend? What did it do to your bottom line? And that bottom line, remember, has to do with taxes. So that's one thing we're going to be looking at as far as our financial performance is concerned. The other thing, remember, as a manager or as an owner of a business is you need to look at your balance sheet to see what kinds of resources do you have under your control in order to make that difference. And so we'll be looking again at the balance sheet, and we'll be looking at vertical and horizontal analysis of that balance sheet to see how it changes over time and to see how the complexity of it changes over time, or the proportionality of it changes. And horizontal and vertical analysis allows us to do that. In addition, we're going to be looking at the liquidity. How quick can I get cash from my resources? How quickly do they convert into that magical thing known as cash? So we'll be doing liquidity ratios, and we'll be doing cash flow ratios on our resources. Now, when we look at our balance sheet, we know that we have resources or assets to make a difference. The key question is who controls those resources? Are they controlled by others? In other words, are they liabilities, are responsibilities to others? Or are they controlled by us, the owners? And so we'll be doing ratios that have to do with solvency. Solvency says who controls those resources. And not only will we look at that, but we'll look at how quickly can we convert or flow between cash. So those are those cash flow ratios again. And finally, we'll look at market strength ratios. And the market strength ratios is how your balance sheet and your income statement and your statement of cash flows translates into how the market, the stock market or others, perceive you. So we're going to be looking at market strength ratios such as the price-earnings ratio. How does your company's stock do versus its earnings? We'll also be looking at the dividend yield ratio. In other words, if you pay dividends to those wonderful stockholders, what kind of yield are they getting on their investment? So that's what this chapter is about. It's kind of a nice capstone, don't you think?